What's up guys, it's your boy Kevin here, and today we are going to start forex trading, and this is the forex trading for beginners, and it's a full course on forex trading. And before we continue, I assume that you are a beginner and you don't know anything about forex, or maybe you know forex but you don't know much about forex. And for this course I am targeting the beginners, and this course is taking you from beginner level to advanced level, and this is the part one of this full course for beginners. And in this course you learn the introduction to forex, what forex is and type of forex that we have, the players in the forex market, forex trading structure, and reason why you should start trading forex. What is expected of you during this course? First of all, you are expected to try as much as possible to understand all the concepts that are taught here, right? If you don't understand, rewatch the video, okay, so that you understand every nitty-gritty for that particular part of this series of video. And begin with the question why. So because you are here, or because you have clicked this video, then I assume that you have already asked yourself, why should you watch this forex course? Why should you start watching a forex for beginner course, right? So one of your why has been answered. That's why you are here. That's why you have clicked this video. Number 4, you do the work because practice makes perfect. Okay, so if you're studying something, then if you do it, or if you do anything, or the quizzes that are in that particular course, then definitely you will excel going forward. And you should also ask questions. We have a group, we have a chat, and we have a description below. We also have YouTube, where you can ask some questions, and you can get some answers from our subscribers or even me, because I'll personally answer their questions also. And number 6, you practice. Okay, it's just like you do the work, but this now you practice each and every time, because practice makes perfect. You have to do the work, then you practice what you're doing, right? So that's number 6. Now that is what is expected of you in this course, right? So before we continue, each and every business has a disclaimer, right? Because now you'll be dealing with money here, so there should be a disclaimer before we go on. Before deciding to trade forex exchange, you should carefully consider your investment objectives, level of experience, and risk appetite, right? The possibility exists that you should sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all risks associated with the forex exchange trading, and seek advice from independent financial advisor if you have any doubts. Actually, I'm here as your tutor, but I'm not here as your financial advisor. So if you want some financial advice, then you should seek it from a financial advisor. Now we're starting with our first lesson, but maybe you don't know what forex. What is forex? Forex is a short form for foreign exchange, also referred as to FX. So forex comes from the word for, from the foreign, and X from the exchange, right? Forex, right? And also referred to as FX. If you've been keen, or if you've been in the forex industry, maybe in the YouTube, here in YouTube, some content creators write their name and then FX or FXXX. So that means their creation, or what they're dealing with in their content creation, is about forex. That's why it's also referred to as FX. So what is forex trading? Because you have known what forex is, now we are going to what is forex trading. So forex trading is an act of exchanging or converting one currency against the other at a given exchange rate. right? So this is just buying one currency and selling the other. Okay, and currency are traded in pairs. No currency is traded as a single entity, right? So if you have one currency, maybe your country, the currency that belongs to your country, and you wanted to buy something from the internet, or maybe from the eBay or any other online shop like Amazon, then sometimes you use your own currency to buy that amount. Okay, and there is some exchange that is going on, or maybe you can pay more, or maybe you can pay less, according to what the product is or the service. And that is what we call forex trading, or foreign exchange, right? So it's buying one currency and selling the other. So you can't buy one currency with the same currency, right? You can't buy like $100 bill with $100 bill. You have to exchange it with a different fiat currency from a different country, right? That's what we call as forex trading. And the currency are traded through a broker or a dealer, right? So if you're in the airport, and for those of you who have been in the airport, so sometimes you exchange the currency that you have or belongs to your country, or the previous country that you were from, then you exchange it through a dealer. Okay, but in the forthcoming videos we'll see how you can change it through a broker too. So you only have to have a medium in order to trade forex, right? And this is through a broker or a dealer. And currency are traded in pairs, like the euro and the US dollar. Okay, you can't write USD against USD. That means you can't exchange US dollar against US dollar, right? So, or a British pound and Japanese yen, this is how it's illustrated here. So it's Great British pound and Japanese yen, Great Britain pound and Japanese yen. So actually you are selling the Japanese yen to get Great Britain pound, and vice versa. You can also sell this one to get this one here, right? So this is what the pairs means. But buying and selling a currency is like buying a share in a particular economy in a country. So when you buy like a British pound, you are like buying a share in that British economy. The same when you're exchanging through Euro USD, you are basically buying a share in the US or in the Europe, right? So that is what it means. So if you're buying and selling a currency, it's like you're buying a share in that particular economy of that country. Forex market is the largest and the most popular financial market in the world. It's most popular more than stocks, it's most popular more than indices, it's more popular more than cryptocurrency. According to this image here from axi.com, as of 2023, we see that the forex market is 6.6 trillion, followed by New York Stock Exchange, which is 22.4 billion, and Tokyo Stock Exchange, which is 18.9 billion, and then the last one is the London Stock Exchange, which is 7.2 billion. So we're seeing that the forex market is the largest here, right? That is the average trading volume. So 6.6 trillion is the average trading volume per day. So you see that even if we had all of these, then it still cannot reach the forex market. Okay, so forex is one of the largest, and that's why we are here to learn what forex is and learn how to trade forex, because it's one of the largest market in the world. Unlike other financial markets, forex market has either a physical location nor a central exchange. Okay, so when we'll be trading forex, then you'll find that we do not have any physical location nor a central exchange. And then the forex market is considered as an over-the-counter, or the OTC, or the interbank market due to the fact that the entire market is run electronically within a network of banks continuously over a 24-hour period, 5 days a week. So whenever we are trading Forex, then you should know that the trading that we are going to conduct is being conducted interbank market. It's traded 24 hours, 5 days a week. So what you should know is that Forex traders don't trade Forex on a weekend, right? But they trade Forex in 5 days a week. That is just to explain that because it's interbank market, then most banks don't work on weekends. So whenever weekend comes in, then Forex also ceases to be traded, right? So because of this fact, you'll need to get started with a medium that you can use or to trade, which is the computer, a tablet, and a smartphone or a smartphone. So this is the computer, a tablet, or a smartphone. Then you should also have an internet connection and the knowledge about how to execute trades. So you might have the computer, tablet, or smartphone and internet connection, but you don't know the knowledge on how to execute trades. And that's why you have clicked to this video to watch and have the full knowledge on how you can trade Forex, right? So there are two types of Forex, right? So we have offline Forex exchange, right, which is the offline exchange offices. If you have ever been in one of these airports, maybe you have ever seen something like this, where you can exchange your currency from one currency to the other. Okay, when you're coming from a certain country, so you have to use the currency for that particular country. Okay, so if I'm from maybe Africa and I'm going to the US, I can't use my money, the money that I have or the currency that I have from Africa in the US market or in the US, right? I have to exchange that particular currency to the currency of that particular country. Okay, and maybe you have done that, but you didn't know what that is. So that was what we call Forex. And this is, or the booth that you're seeing here, is the offline Forex, right? So you give this attendant some currency, and he gives you a currency that you'll use for that particular country. And just the same as this one here, online Forex. Online Forex is an online exchange offices, right? And this is what we'll be doing. We're not going to do this one here. This is for maybe some banks and so bureau de exchange, right? But we are going to use the online Forex exchange offices. The exchange is done online using computerized platforms through the Forex brokers. So we're going to use the computerized platform through the Forex brokers, and later on we'll see, or we'll look at the brokers that we have and why we have them and when we should choose them, right? So that's it. So we are going to use the online Forex. Okay, this one you can use this one when you're traveling and all that stuff, but in this course we are majorly focusing on the online Forex. So who are the players in the Forex market? So each and every market has its own players, right? But in the Forex market, there are 5 major Forex market players or participants in the world, right? So we have the largest banks. So what are these largest banks? These largest banks determine the exchange rate. They are the ones that make the bid or ask price in the market. So we'll see what is the bid price and what is the ask price in the market and how the largest bank do that. So we'll see later on, right? So these are the large banks that are collectively known as interbank market, right? The interbank market is the forex exchange market. They take a number of forex transactions each day, both for themselves and their customers. Okay, so we'll see what that is in the forthcoming videos. And the second one is the commercial companies. These are another players in the forex market. They take part on the forex exchange market for the purpose of doing business, right? Exchanges like Apple company do that. If Apple company wants to purchase electronics from China, they first exchange the dollars for Chinese yuan, right? They normally deal with the commercial banks for their transactions, since the volume of trade is much smaller than those of interbanks. Okay. So when the Apple computer want to buy something from China, they exchange that amount to Chinese yuan. That's why sometimes you'll find that some Apple products are designed in China but are assembled in California, which is the United States. So when they're buying that, there is an exchange between US dollar and Chinese yuan, and that is makes the commercial companies be major players in the forex market. So the other one is the government, right? The government participates in the forex market through their central banks, through their operations, international trade payments, and handling their forex exchange services. So central banks is the government bank, right, which they usually affect the forex market when they adjust the interest rate to control inflation or deflation of a country. They do this by massively selling or buying operation to alter the exchange rate, right? So the government also are major participant in the forex market through the central banks, right? So others are speculators, and they engage in forex to make quick load of cash. So what they do is they buy currency at a lower price and then sell it back at a high price, and they then buy back the currency when it comes lower to a lower price. So they basically buy low and hold it, and when it rises, the price rises, they sell it, and then they wait, they buy it back down, right? Their work is to analyze and forecast the futures of price movement, then buy big position to score huge profits in return. So these are done by tycoons. Sometimes they watch the market and they see that they can buy a certain chunk of currency for that particular time and then hold it, okay? And when it rises, then they profit from the rise of that currency pair, right? So some are retail traders, and this is where we are lying, me and you and any other forex traders that you know are trading online. So they are the tiny segments in the forex market where individuals speculate in the exchange rate between different countries, right? So these players are me and you, right, in the forex market. So me and you, so we are the tiniest people, or we are the tiniest traders in the forex industry as compared to banks, right, speculators, even government or commercial companies, or even the largest banks, right? We are the smallest or the tiniest segment in the forex market. So we also benefit by selling and buying currency from one currency to the other, right? So other forex market players are foreign exchange fixing, investment management firms, net banks, foreign exchange companies like Bureau de Change. These are now the ones in the airport that we saw earlier. Then the money transfer and remittance companies like Western Union. So the Western Union also benefit from forex exchange. So when somebody is in US and want to sell or want to send you money in China, right? So what they do, they go to Western Union and then send that money, and you receive that money into your local currency, like the Chinese yuan. So that means the Western Union in between has done the forex market exchange. So the other one is the retail foreign exchange traders. Okay, and there is this structure. This is now the forex trading structure. The forex trading structure is as follows. Now these are the retail client, which is the traders like me and you, right? And then we go to an online forex market makers, which these one are the brokers. So the brokers here, when we're doing online trading, so the banks give us the bid and ask price for the brokers, and then we buy it, right? We buy it. So the banks gives us the prices, and we buy it from the broker. Okay, and then we have now interbanks market, which is the EBS and Reuters. Okay, so we have the interbanks, which the banks do, I mean, forex trading by themselves. And then we have online trading. The online trading, we are getting some prices of a currency, low and high, or buying and selling from the interbanks to us, like we are the retail clients. These are the reason why we should be trading in forex. So first of all is the volatility. So forex market is always moving in and is making large movements, which creates large volume of transactions and high liquidity. So volatility measures how the large upswing and downswings for particular currency pair. It is when a currency price fluctuates wildly up and down. Okay, so we profit by the price fluctuation. So when it's low, we buy, and when it goes up, we sell, right? And vice versa. When it's up, we sell, and when it's down, we buy. So another thing is the accessibility. So we have the volatility, and the second point is the accessibility. In order to trade forex, you only need a device, okay, which is the computer, tablet, or a phone with an internet access, right? So it is easily accessible. So if you have a computer and an internet access, then you can trade forex, right? Unlike other markets, forex market open 24 hours. Other is forex bonuses and promotions. So another reason why we should trade forex is that the forex brokers, like I will show you in the forthcoming videos, lessons, that the forex brokers offer a number of bonuses and promotion to traders, right? And number 4 is the leverage. You don't need a huge amount of money to trade a huge amount of currency. So we'll also see this in the forthcoming lectures, that you don't have to have a larger chunk of money to trade forex. You can leverage by borrowing a certain amount of money needed from a broker to invest in a pair of currency and trade. A trader can build up and control a huge amount of money. When the trade goes in your way, then you benefit, and vice versa if it doesn't. So that means you can borrow a large chunk of money, right? Maybe you have $100 in your account. You can borrow even $100,000 to trade with, right? So when you trade with that amount of money, then when you get a profit or even 1% of that amount, then you'll be having 10% of 100,000, right? So that will be $10,000 if you get 10% of that amount. So you don't need to have a huge chunk of money to trade forex, but you can leverage that amount of money that is given to you by forex broker, and you can trade with it. So in the forthcoming lectures or in the forthcoming lessons, we'll see how that can happen. So we also have a low barriers to entry. So we only need a few conditions to engage in forex compared to other markets. So we don't have to go to the government and give for certificates and all that stuff, right? Like in a hotel. If you're starting on a hotel business, then you have to go to the government for necessary documents for you to start the business. But in the Forex market, you don't need that. You only need some little money or some little currency, and then the knowledge and the computer and an internet connection, and you'll start right away. So no commission is charged, right? No commission is charged. So no clearing fees, no exchange fee, no government fees, no brokerage fees. Brokers are compensated for their services through bid stock ask spread. So we'll see how this one works. So the broker will not charge you a commission for you to trade, but they deduct a small amount from your trade so that they can pay themselves as the institution that gives you the platform to trade. And we'll see what these bid and ask spread are in the forthcoming lectures. And that is the end of our introduction or introductory lessons for Forex traders for beginners. Until next time, see you in the next video.